Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothwell, and here are a whole bunch of stuff to pay attention to for the upcoming trading week. Now last week we focused on the US dollar and its amazing trajectory almost straight up, and that continued. We saw some pain in commodity prices like gold and silver as well last week. And then we had earnings kicking off with some financial firms, and they disappointed. Ugly forecast for the future, which means we might see some negative moves in this equity market simply based off a bad earnings season start. So let's start there and find out what's happening this week with regards to earnings. We started off with 249 different companies reporting this week. Going to Monday, it's more banks. That's right, Bank of America, Goldman Sachs, Charles Schwab, Synchrony Financial, and International Business Machines. That's just Monday, major names. Let's go to Tuesday. You've got Netflix, which is in green there because that'll probably be the most volatile stock of the week just because it typically is on earnings. You also have Johnson & Johnson, Halliburton, Novartis, J.B. Hunt, Ally Financial, and Interactive Brokers. Wednesday brings us Tesla, Kinder Morgan, Alcoa, United Airlines, Seagate Technologies, Biogen, and Harley-Davidson. Thursday, we've got AT&T, Snapchat, American Airlines, Intuitive Surgical, and Philip Morris. And then Friday, Verizon, Schlumberger, and American Express. Now, this is just a small sampling of some of the earnings happening this week, so make sure you check your earnings calendar because you don't want to get caught off guard, as some of these can be major movers because of either surprises or disappointments. We just don't know. All right, now let's get to the meat and potatoes of the week, which is going to be central banks again. As we noticed over the past several months, almost every central bank around the world except Japan and the ECB have been aggressively raising rates. Japan's saying, nah, we'll keep things down here, negative 1.1%. ECB saying, we'll keep things at zero. Will that continue? Well, let's see what's facing the ECB. You can see here that on Thursday at 8:15 a.m. Eastern Standard Time, the ECB main refinance rate comes out, and lo and behold, the expectations are they're going to keep it exactly where it's at, 0%. Now, why is this so important? Well, of course, if you have an inflationary environment, raising rates is a good way to combat that. Well, maybe Europe has no inflation. That brings us to our third piece for the week, which is going to be the Consumer Price Index for the EU. Now, if you look at this chart, I'm pretty sure we can all deduce that this has some serious inflation implications. This is CPI, which is Consumer Price Index, and Tuesday at 5 a.m. Eastern Standard Time, this will come out for the EU. Now, you'll notice on the hard red edge there, that's 8.1%. That is a significant spike in CPI, certainly going back to 2020 when they were actually negative and having no problems with inflation. Now, all of a sudden, it seems like it's out of hand. So we take this one step further and we look at the trajectory. Well, let's look at their rates. This is what they should look like. This is the main refinance rate chart. And you notice on the hard red edge, I drew a little blue triangle there, which should be reflective of inflation. But no, they're not doing it. They're keeping things at zero. Now, if every other central bank, you're talking Australia, New Zealand, Canada, the United States, and more, and UK, all raising rates aggressively to fight inflation. The expectations are now we may see a full 1-point increase at the next FOMC meeting here in the United States. We're being aggressive, and Europe's like, it'll be fine. From what I read, they're saying they're not going to raise rates until 2024, which begs the question, what on earth is going to happen to the European Union? We've seen over the past couple of months the US dollar surging in strength, and that euro, it's a bug in search of a windshield right now. It's actually just broke parity and may go even lower. So keep your eye on this one. We may see some changes here in the near future because I just can't fathom that Europe could keep their rates like this at zero for very much longer without having serious impacts on their economy. Now, that's not an actionable item for this week. However, if you are trading the euro, you could see some significant pops based off what happens at that meeting and that announcement. That, my friends, is Monday Morning Must Knows. We'll see you next week.